Well, hello members. This is another edition of the Cradle-to-Grave series. We're really just tracking one stock right now, which is GLD. Of course, we got positions in other areas like SLV, the JJG, but they're all kind of dependent on the dollar. They're dependent on commodities in general doing well. And so, I don't really want to pick up on another one of those and continue it. So I'm going to pick up on one that we started before, which is Equifax, EFX, as a long-term play that we're working to the long side, and use it as a second stock that we kind of track so that we can do this cradle to grave, which not only just shows you why we're doing what we're doing, but it teaches, right? And that's what I really want to try to get across as much as I can as we continue this series. So let's go back to gold here. Let's see what happened now. Last week I did an update on this and I was talking about the fact that you really want to buy the weakness. It's hard to buy that weakness. I understand that, but at the same time, the market gives you pretty good clues as to what it wants to do and what it's going to do. And so if we look at this chart just on the daily basis, big push down, right? And let's go over the things that we're showing here that we're telling us that we probably want to try and buy it. The first thing is ABCD structures, right? So you had an ABCD structure here that completed, right? And then you got a little bounce out of it, which started another ABCD structure, right? A point, B point, C point there. That more than completed as well. And you were coming into the bottom of what was this range, which we'll be able to see more easily when we look at the weekly. But we can draw it in here. We can kind of see a range set up here, and then one that's kind of equidistant below it, right? And so we kind of got those two ranges that are in effect, and lo and behold, on this bounce that took place Friday, where does it go to? Well, it goes to the middle of that range, which is what you would expect, right? That's the key area to get over. So I would expect that what we're going to see on a short-term basis is this is going to be the struggle point. Whether we see some sort of a backing and filling and then a push back into the top of the range, I don't know exactly how it will play out, but I suspect we're going to get back into the top of the range again. And so as we came down, we finish up an ABCD structure, we get towards the bottom of the range, we can't push under it, we get 4 days of consolidation, and then boom, all of a sudden news breaks somehow, some way, pushes this thing back up. So the buy was in that area as we got down there. That's what we talked about. As you know, we didn't put on any more gold because we've got a large position in the gold. I was actually waiting on a lower price. We put it on the silver market instead because we had to be cognizant of the fact that this thing, if it broke this area, could trade all the way back down to here, which is where we would want to buy, right, if we had to buy on another dip down. There is this little support zone here. That would be the next buy. And if we had to, we could buy all the way down here with the same idea that this is going to turn. You really don't want to see it trade this deep. This is probably about as deep as I wanted to see it, and that was going to be the next buy point if it flipped down there. But it didn't. It held, pushes back up. So now on a weekly basis, you get a takeaway bar on a weekly basis. Finally, if we push to the monthly, on the monthly, remember we had a takeaway bar. Now we're starting to go back the other way on the monthly, and it would be interesting if it ends up doing a takeaway bar on the monthly of a takeaway bar. But that's a ways out. We're just at the beginning of the month, but we're probably going to see follow through to the upside. Let's turn our attention to a new stock, EFX, Equifax. Now, it's not new in the sense of the portfolio because we'd put it in some time back, but let's talk about why we're trading this stock. Earnings come out on Equifax here, consolidation, and then a continued push to the top side. Equifax makes a swing point break here, another one there. It just continues to grind higher. If you pull it back, look at it on a weekly, same thing there. If you pull it back on a monthly, it's the same thing there. Nothing but swing point lows all the way up, never registering a swing point high on a monthly chart for what amounts to 5 years now, folks. That's a long time to go without any kind of a swing point on that time frame. Does that make it more risky? Sure it does. But if you look at it on the intermediate term time frame, right, you've actually got a sideways trend I want to come back to that and show you that intermediate term time frame. The sideways trend is here. You went bearish, sideways there on the breakout. This just tells me that this has longer to go on a intermediate term time frame, which is why I'm making the trade. If we go back down, and I'll just use it here, if we go back down to the daily, right, it's becoming extended, so I wouldn't be surprised to see some sort of a pullback into support, either here or maybe even as deep as there. This is a trade we'd like to do for multiple weeks or months, probably months. And so the ideal is start a position somewhere, which we've already done, and then allow it to fill out, and then make those accumulation trades as it does that. And so that's what we're waiting on. If it just continues up, at some point we'll take profits. If we get the retrace, right, we'll add to the position that we started back here. That's it for this week, or actually for this session, and I'll follow up as time and material warrants. Thanks.